All right, here we are. Welcome back. It's hump day, Thursday, and I mean, we're going to touch base on what I called at the beginning of the week and where we're at now. So, I'm not going to deny myself. I said I didn't want to see price go past the consequent encroachment of this wick. I was wrong. What it wanted to do? Well, let's see. So, I'm looking at a daily chart, NASDAQ on the right, ES on the left. ES, this was all right on Monday and all right Friday. All right, let me calm down. Friday and Thursday we left relative equal highs. This high is one tick above this candle's high. If you see that, this H right here that you can't see, but this number right here is going to be the highs of those candles. See how they're one tick apart? On Monday we came out, rated that high. Sweet, nice. Well, in NASDAQ, that same Monday candle, if you see like this vertical line, it's the same exact one as I go back and forth. Okay. We only came up as high as that previous Friday's high. We took it out, rated it, and that was it. We stayed underneath this candle's low, which I wanted to see act as an order block, as our big expansion candle I had mentioned was our tip of the hand of where we want to see price head. Okay, didn't make a new all-time high. Yes, it does. All right, that's fine. We had our Judah swing. This was our power of three. We had the manipulation of the week, getting traders to chase price, go higher, and then we have accumulation and distribution, which is happening during the middle of the week right now. Our Wednesday and Thursday should see lower prices. So I didn't call the exact spot of where it reversed, but I did say I wanted to see lower prices and that we should not see a new high. If I was wrong, then guess what? I would have been wrong, just like I was wrong about this with consequent encroachment holding price at bay. Instead, we came out, took out this candle's high, and now we're working our way lower. Now, on the daily time frame, this might not look like, much. It's just, they're just like one candle after another. What does he even mean? But when you get down to, now we're going to drop into my hourly chart right here. This is ES, by the way. Okay. These are the relative equal highs that are these two candles. See how much different that looks? And that's because of the time and price continuum. Okay. We have the high that's made on Thursday. A new day starts at 6 p.m. right here. We have the low of the day that's created during the first half of the day. That's the manipulation, like I just explained. Now here's the expansion higher. Where does it head to? One tick above this candle's high. Why? To take out the liquidity that resides there. But it also does leave a fake resistance line that retail is going to see as, well, resistance. Oh, look how price rejected here, and now it's heading lower. When we get back up there, we're going to see more. Meanwhile, smart money traders, which is us, we're attacking that the whole time. And during that key time, it's going to be 3 to 4 a.m. That's the London silver bullet. 10 to 11 a.m. That's the New York AM silver bullet. And then 2 to 3 and 3 to 4 p.m. I like to just say 2 to 4 is a good window for that. But I do not trade that. I usually never do. Something I could add to my bag, but I'd have to do more work before I'm able to trade it. Okay? That's kind of what I'm going to spell out today. I'm going to spell out where I would have taken trades because I wasn't a part of any of the Tuesday price action, but I will show you the trades I took on Monday. So, right here, this is the 10 o'clock silver bullet. What am I attacking? This candle's high right here at 5708. Okay? Now, I'm going to take this into a 1 minute chart. And we're going to go to Monday at 9:45 right here. All the silver bullet is a fair value gap to liquidity. Now that liquidity needs to be a higher time frame liquidity draw, daily high, daily low, or a new week opening gap. That's another key one. Those are the only two ones I trade to. I don't do new day opening gaps. I only do new week opening gap and a daily high or low. That's it. That's what I found to be the most efficient. You can add more. I know there's new day opening gaps, something along those lines. There's multiple in the video that ICT made, but it's all about you and your understanding of price. He has everything mapped out, but the map won't matter if you can't read. Okay? So the way I read it is I read price did not want to reach for the new week opening gap here. I tried a NASDAQ and I got punished for it multiple times. I got absolutely obliterated. And so I submitted that, okay, I'm wrong. Where's it going to go then? And I knew exactly where. The relative equal highs, because price likes to attack that. So all this is was me buying this fair value gap right here. I took 3 contracts. I just pyramided it. And from there, I had, just a really good trade. Just a 10 handles, or not 10 handles, my bad. About 8 handles, 9 handles in ES. I had good risk management as well. If you want, you can watch the video for that. It's on my YouTube channel already. I believe it is called Accepting I Am Wrong and Switching Gears to Where Price is Drawing. Or you can watch the trading montage, which is the 7, 14, 15, 24, 7, 15, 24, silver bullet to previous day high. So that was that trade. I also took it in NASDAQ, but I also got punished. Watch, if I go to NASDAQ right now, and I go to that same exact time, the executions are ugly. Ugly. And this is the reality of it, because why? I started going short. I wanted to go short to the Monday opening price, which is the new day opening gap, right? Okay, well, got it wrong here, got stopped out. Tried again, got stopped out here. Tried it again here, got stopped out there. Like, this is just, I can't even read this. I can't even read what I'm doing here. And that's how you know it's not good trading. Here's where I finally switch gears. I decided to buy, pyramid again, pyramid, pyramid, pyramid. It's a lot of consolidation. But ultimately, see, I don't even have a storyline of what's going on here. This is just blurred emotion. Ultimately, we get to this fair value gap right here, which starts at 10:30, which is a key time it's a key time of the algorithm of spooling and where it's going to head next. It's an hour after the opening bell, and all of this right here, I just had to be patient. I just had to sit on my hands. There's nothing for me here. I should have just taken my 1 or maybe 2 losses and sat on my hands until I had a clear understanding of price. Because all of this right here, if I take the executions out, it's chop. There's no clear story, no clear narrative here of the draw on liquidity and where price is headed until we break out here. 10:30 leaves our first fair value gap in the whole hour, except for this one right here. But we don't go back to that one, and we don't have the opportunity to buy it. Comes here. Now we get our opportunity. And where do we take our profit? Well, that daily high right here, which is at 27.41. And so here I'm taking partials. That way I'm getting paid for my position, especially kind of trying to take care of those losing trades. And then I ultimately hold up until 4 contracts to 27.41 and a half, because we want to see price go to and through that. So 11 o'clock happened and boom, just took it out. Created our high of the week right here, and then we haven't looked back ever since. Just keep going. All right. So getting into Tuesday's narrative, that's this candle right here. We want to see a new low of the week, which is 25.06 and a quarter. If I take you back to my hourly chart, which this is the hourly chart, dang it, this is what I was using. Okay, we'll get to this chart in a bit. This is the good stuff. Take you back to the hourly chart, and we're gonna go on Nasdaq. Okay, this white line is our Monday opening price. This is where we start our Monday weekly candle. It's the same exact thing. 25.78 and 3/4. If I go to my weekly chart right here, I go to this opening price right here, 25.78 and a quarter and 3/4. Daily price, 20. Yeah, it's the same thing. Okay. Now we're just looking on it on an hourly chart. We create the low of the week. Go make a high. This is the high of the week. That was created at 11 a.m. Remember that? I just said it. Come back lower, and then we make the same exact low at 5:06.25 on Monday at 3 p.m. Okay, cool, perfect. It sells up. Remember at the beginning of the video I said we were attacking ES as relative equal highs because we know they love to be targeted. Retail sees that as safety. Algorithm says that as this is a war zone. I'm taking you out. Now, the exact thing has happened, but it has created relative equal lows in NASDAQ. So guess what? We're going to be attacking that now. 9 o'clock comes out, takes out these relative equal lows left during the London session. Relative equal highs, my bad. High left during this London session. Kind of gets into this little SIBI right here as well. And then we start the drop. This was hard. There's really no good way to trade this. There's an order block right here. All right, so I'm gonna now make this bigger. This red line are those relative equal lows at 5:06 and a quarter. New week opening gap, Monday opening price. This candle's closing price is 664 and a half, and this candle's low is 664 and a half. So yeah, this technically isn't even considered an order block because it needs to close beneath this candle's low. And so there's no real entry even to your first target, which would have been the new week opening gap if you're going short from up here, because it's a fair value gap. Remember, even here it reaches almost into the fair value gap, but not quite. The only opportunity we have is right here at 9:48, but that's not 10 o'clock yet. It's not valid. You could have taken it, but you had to be prepared to price reach into this fair value gap potentially, and then even into this inversion fair value gap. So it would have been a small contract trade, maybe with just like 1 or 2 micros. But we get that first fair value gap offered right here when price reaches into it. Okay. The reason I'm highlighting both of these, and even I guess I could do this one as well, is because we had to allow price to reach into this entire imbalance right here. It's a deep premium, and you have to allow for that. If you don't, you're not allowing for price action to do what it can possibly do while still being right. And so if I would have gotten here with my stop loss like at this candle's high, I mean, I could be right about price as much as I want. Like it could still go to where I want, but I could have gotten like stopped out before. And this sucks. This is what I'm gonna show you in model 22. Like for example, this fair value gap that forms. Okay. It takes out, like if you had your stop loss right here, you would have got stopped out. See that? Anyway, I'm getting ahead of myself. Silver bullet. Fair value gaps. 10 o'clock starts. You're reaching this fair value gap. Boom. We get in at 25.89 and a half. Targeting those relative equal lows. And it would have taken us 7 minutes for that trade to be done. For over 80 handles. Wow. But your stop loss would have had to been all the way up here. And that's a lot of handles as well. So, like, still 1 to 2 pretty much. Okay. Okay. Shortly after, we have our low. We have a high. Blah. We get over here. And we have this fair value gap at 10.28. Now, saying it out loud, I don't see any swing high broken here. Ooh, that was a good crack. I don't see any swing high open. The only reason I would have taken this trade is because we have a down close candle with a huge engulfing candle. That's high probability. So 2 down close candles, that leaves a buy side imbalance, sell side inefficiency, fair value gap after relative equal lows has been purged. almost meets all the criteria for model 22. And the only reason I would have taken this trade was because this candle was the start of your 10:30 time. Okay, so we have our entry at 25.21. Stop loss would have had to been down here at 97.25, so not even 10 handles. Wait a minute, no, I said that wrong. 20 handles, and then it would have offered you 50 handles. So really good stuff here. I love the respect of that little week opening gap. Yeah, wow. Would have been good stuff. But now what I'm gonna do is I'm gonna take ES. I'm gonna go see how that kind of delivered in the same way. So then we get to this. All right, this one right here. Boom. Wow. Okay. All right, I'm onto something right now. Let me cook. Oh man. I'm just gonna mark these lows. Okay, back to the 1 minute chart. Yeah, okay, never mind. All right, so this is another model I've kind of derived. This is model 11. I know how in model 22, 2022 ICT mentorship teaches you have to wait for a purge on a daily high or low. Okay, what I've come to notice is that when these markets are in tandem and sync, when you're using the six sister concept and you're wanting the S&P 500 to do the same as the NASDAQ, they're going to act really, really similar. And so if you notice right here, we have our opening bell high. Mark it in green. Make this full screen. While NASDAQ purges a previous day low, kind of does that. It does leave this for value gap, but it doesn't shift any market structure that has a swing high. In ES, look at that. Does this not look exactly like something we know and have come to love? We have a fair value gap that shifts market structure. Is an elephant in the room bullish candle. And there's an easy target right here with these relative equal highs. I mean, this is just gorgeous. If I would have outlined this, boom, there's another trade. 5,695.5. Stop loss would have been at this candle's low right here. This is an order block. If you notice that price comes down just an extra tick just to come and touch this once. There's your order block. Here's your stop loss. So at 91.5, you've been risking 4 handles to get 10.25. So man, like this is just gold. Man. Yeah, you could have taken all 3 trades to there and then called it a day after walking home with some freaking cash. But yeah, these are the only models I trade, all within the same time span of 10 o'clock, the 10 o'clock hour, and it's done. And that was it. All you had to do was show up for 1 hour, and you would have walked away with some cash. And I slept. All right, well, that's just unfortunate, but it's not the end of the world. There's going to be a lot more opportunity like this, but these are the only models I will trade now. Model 11 and Model 22 are very, very basic, and they're really good in terms of discipline and knowing what you're looking for before getting into a trade. You have the previous day, or you have a daily high or low that gets traded. You have a fair value gap that shifts market structure and is very evident. And so seeing this multiple times, your brain's gonna know, okay, that's our model. We're gonna trade this. The silver bullet is very different. You have to have a really good understanding and narrative of where prices come from, what price is doing now, and where it's heading next for you to get in on just any fair value gap, because it is not just any fair value gap that you can enter and be like, oh, it's a silver bullet fair value gap, because you're most likely going to be wrong your first few times. I know I was, and I still get it wrong. But with time and practice, repetition, experience, you get a lot better with that. Yeah, you do. And so, like today, or this Tuesday, was a really good example of that, as we had those relative equal lows, and that's a really good easy target for you to just know that, wow, the algorithm's going to want to send price there, okay? And so this is a good trade. You would have had to, manage your risk accordingly, but even with 2 contracts, you're risking less than 2% of your account here if you enter at 89. So yeah, that's it from me. I looked at that Wednesday candle and it's blood, just blood. But I really want to just go over this for Tuesday. I'm probably not going to touch much about Wednesday, but we're on the right page, and I guess we can kind of see where price is headed. Yeah, and close over all of this buy side imbalance here, and so I'm going to watch this little area to see how we're responding it. I want to see how deep price retraces, and I also want to see this low taken out in, yes, this is the target though. This is the target in NASDAQ, as well as our liquidity pool here at 19,725.25 and 2525. Okay, well, you guys have everything that this brain has to offer for the public's use of knowledge, and I hope that it helped and that your trading improves from it, that you can draw from my mistakes, from my wisdom, from my failure and wins, and put it into your own. And with that being said, safe trading and be safe. I'm out.